What if I told you you're probably overpaying your taxes by thousands of dollars each year and don't even know it? Look, for most people, tax season is a nightmare of stress, confusion, and anxiety. You work your tail off all year, only to watch a huge chunk of your money vanish, handed right over to the government. You're left wondering, did I miss something? Was there a way to keep more of what I earned? The simple truth is, yes, there is. Most people give away a significant portion of their hard earned money simply because they don't know the legal strategies the wealthy have used for decades to shrink their tax bill. Well, that all changes today. As a CPA, I've seen it all, and I'm ready to pull back the curtain. In this video, I'm going to walk you through 7 powerful, completely legal tax saving strategies for 2025. These work for individuals and business owners, and we're not talking about sketchy loopholes. We're talking about understanding the rules of the game and finally using them to your advantage. So, if you're ready to stop leaving a massive tip for the taxman, let's get into it. Section 1: Supercharge your retirement accounts. First up, and this one's a biggie that pretty much everyone can use. Let's supercharge your retirement accounts. Think of these as a direct line to lowering your taxable income. Every single dollar you put into a traditional 401k or a traditional IRA is a dollar you don't have to pay taxes on this year for 2025. The government has given us some pretty generous contribution limits. Let's put that into perspective. If you're a single filer in the 24% tax bracket and you max out your 401k at $23,500, you've just instantly saved $5,640 on your federal tax bill. That's not a maybe, that's a guarantee. Then you've got the individual retirement arrangement or IRA. For 2025, the contribution limit is $7,000. If you're 50 or older, you get an extra $1,000 catch up for a total of $8,000. Now, there are income limits for deducting traditional IRA contributions if you also have a retirement plan at work, but it's an incredibly powerful tool if you qualify. Or if you don't have a 401k, that $7,000 contribution in the same 24% bracket saves you another $1,680. By maxing out both, you could potentially slash your tax bill by over $7,000 before we even touch another strategy. This is the foundation of smart tax planning. Section 2: The Ultimate Tax Shelter, the Health Savings Account SHA. If there's one account that I consider the undisputed champion of tax savings, it's the Health Savings Account or SHA. Seriously, this is the only account in the entire tax code that gives you a triple tax advantage. 1. Your contributions are tax deductible, which lowers your taxable income for the year, just like a traditional IRA. 2. The money in the account grows completely tax-free. You can invest it, and all the earnings are yours to keep, no taxes. 3. Withdrawals are also completely tax-free, as long as you use them for qualified medical expenses. It truly doesn't get any better than that. Let's say your itemized deductions are almost there each year, but never quite enough to beat the standard. Instead of making your charitable donations every year, you could bunch 2 or 3 years worth of donations into a single year. There is a ticking clock on one of the biggest tax deductions of the last decade. Let's eligible owners of pass-through businesses, that's your sole proprietorships, partnerships, and S-corps, deduct up to 20% of their net business income right off the top. It's a below-the-line deduction, which means it reduces your overall taxable income, not just your business income. It is incredibly powerful. For example, if your small business has a net income of $100,000 for 2025, bonus depreciation is set at 40%. This allows you to deduct 40% of the cost of qualifying property after you have taken any Section 179 deduction. The fact that bonus depreciation is phasing down makes strategic timing of your big purchases absolutely critical, but the easiest is the simplified method. This lets you deduct 5 per square foot for the part of your home you use for business, up to a maximum of 300 square feet. 7 powerful, actionable strategies you can use to start saving real money on your 2025 taxes. Investing in your business and taking care of your health. It's about taking back control of your financial future. The tax code is a beast and your situation is unique. While these strategies are a fantastic starting point, your next step should be to put this knowledge into action. When you understand these incentives, You can legally and ethically set up your finances to pay exactly what you owe and not a penny more. The thousands of dollars you save can be plowed back into your business, used to build your wealth, or spent on what truly matters to you and your family. We talked about maxing out your 401ks and IRAs, unlocking the triple tax threat. Avensha, who feels like you're repaying way too much in taxes and you want to get serious about a proactive plan, this is what we do. My team of CPAs specializes in creating custom tax reduction strategies for our clients. If you're ready to see how much you could potentially save, apply to work with one of my CPAs today at mikepacoach.com. We'd love to help you build a plan to keep more of your hard-earned money. Thanks for watching, and I'll see you in the next video, and playing the standard versus itemized deduction game with smart strategies like bunching. For you business owners, we hit on the urgent need to use that 20% KB deduction before it vanishes and how to use Section 179 and bonus depreciation to write off major purchases. By combining these two deductions, businesses can often write off a huge chunk, if not all, of their capital expenses in the year they buy them, and 2025 is the year to cash in before it's gone. I'm talking about the qualified business income or KB deduction, with so many people thinking it's an automatic red flag for an IRS audit. Let's be clear, that's just not true if you follow the rules. With the explosion of remote work and home-based businesses, this deduction is more important than ever. This can push you way over the standard deduction threshold for that 1 year, letting you itemize and claim a massive deduction. This doesn't mean you need a separate room with four walls, though that is the cleanest way to qualify. It can be a specific designated area of a larger room, but you can't use that same space for personal stuff. It has to be your principal place of business, and you've got to be diligent about documenting its use. For thousands of freelancers and small business owners, this is a simple and legitimate way to turn part of your rent or mortgage into a business tax deduction. Then, in the off years, you just go back to taking the simple standard deduction. And you can't afford to ignore it if you're eligible. Donating appreciated assets, like stock you've held for more than a year. When you do this, you can typically deduct the full fair market value of the stock on the day you donate it. And this is the best part, you completely avoid paying capital gains tax on its growth. It is a double whammy. You get a big tax deduction and you eliminate a future tax bill. For 2025, the SHA contribution limits have gone up, and hopefully, your gears are already turning about how you can apply these strategies. If you're finding this valuable, do me a quick favor and hit that subscribe button. I put out videos like this all the time to help you navigate the complicated world of money and taxes, and it is the best way to make sure you don't miss strategies that could save you a fortune. You can contribute up to $4,300 for self-only coverage and a massive $8,550 for family coverage. And like retirement accounts, there's a $1,000 catch-up contribution for those age 55 and older. Here's the magic: you can pay for your current medical bills out of pocket, keep all your receipts. For 2025, the standard deduction has been adjusted for inflation, and it's pretty high, $3,000 for married couples filing jointly and $15,000 for single filers. Because that number is so big, most people just take it and move on. But for some of you, that's a huge mistake, and just let your SHA balance grow and compound tax-free for years, even decades. Then, in retirement, you can reimburse yourself for all those past medical expenses, essentially creating a huge tax-free cash withdrawal. It's like a supercharged Roth IRA. Don't sleep on this one. To be eligible, you just need to be enrolled in a high deductible health plan (HDH). A lot of people think of ANSHA as just a healthcare fund, but its real power is as a long-term investment vehicle. Section 3, the standard vs itemized deduction game. Every single year, you get a choice: take the easy route with the standard deduction, or play the game by itemizing your deductions. Itemizing is when you add up all your individual deductible expenses, things like state and local taxes, which are capped at $10,000, mortgage interest, significant medical expenses, and charitable giving. If your total itemized deductions add up to more than the standard deduction, you should absolutely itemize to get the bigger tax break. Here's a pro strategy called bunching, an even more powerful move. Alright, we're covering some serious ground. Section 4, for business owners, the disappearing 20% KB deduction. Okay, let's switch gears and talk to my business owners, freelancers, and independent contractors. This deduction, also known as Section 199A. Now, here is the critical part. As it stands right now, the KB deduction is scheduled to expire at the end of 2025. Unless Congress steps in to extend it, this is the last year to claim it. This creates a massive incentive for business owners to maximize their income in 2025 or even pull future income into this year if possible, just to take advantage of this 20% haircut on your tax bill. While there are income limits and specific rules, a huge number of small business owners qualify. You need to talk to your tax pro about how to squeeze every drop out of this deduction because it's a true use it or lose it opportunity. Section 5. Aggressive depreciation. Section 179 and bonus depreciation. One of the best perks of being a business owner is the ability to write off the cost of your investments. The government gives you two incredibly powerful ways to do this. Section 179 and bonus depreciation. Section 179 lets a business immediately expense the full purchase price of qualifying equipment and software in the year you start using it, instead of depreciating it slowly over time. For 2025, the expensing limit is a massive $1,250,000, with a phase out if you purchase more than $3,130. 000 in equipment. This works for both new and used equipment that is new to you. This means a business can buy a much needed machine, a new computer system, or office furniture and get an immediate tax deduction for the entire cost, which can seriously reduce your taxable income and boost your cash flow. Layered on top of that is bonus depreciation. Section 6. The home office deduction done right for years. The home office deduction has been misunderstood and feared. There are a couple of ways to calculate it. The absolute key here is that the space must be used regularly and exclusively for your business. So there you have it. The truth about taxes is that the system is designed to reward certain behaviors, saving for the future. This isn't just about finding deductions. If you're a business owner or a high income professional,